If you're confused by the title of this video, don't worry, it will make sense very soon. I'm really excited to share with you a conversation that I had with Jordon over at Precondo. In terms of pre-construction knowledge and what's going on in the GTA market and really just surrounding Southern Ontario for pre-construction, I don't think anybody does a better job of explaining it than Jordon. So if you haven't already, you can check out his channel, Precondo. I will link it below. Now, we each have a video coming out at the exact same time. This one is me interviewing Jordon, and if you go to his channel, it will be him interviewing me. So make sure to show him some love on his video. Let him know where you came from if you're finding him for the first time. And if you already know who Jordon is, I think you're in for a treat. We've had a few people asking us to do this collab over the last few months, and I feel like we delivered. So as always, make sure to subscribe and like the video if you find this type of content valuable to you in your real estate journey, whether you're buying or selling or just trying to get a little bit more information about what's actually happening. I really hope you enjoy this interview. We'll get right to it. All right, Jordon, if condos are already up 20% year over year, does this segment still have a chance to go 30 to 40% in 2022?
I hope not. Is the gas there? Yes, absolutely. The gap between detached and condos is, the largest we've seen since 2016, 2017. Condos are incredibly undervalued. If you believe that return to downtown, return to to work is going to be a big driver in the next year or so. But I do think they're not affordable by any means, right? So we're at a place now where your average one bedroom, you're trading at $700K. It's very difficult for first time home buyers to afford the market.
Yep.
And so at some point there's going to be some level of resistance just because of income and affordability. I don't know where that level is. I know versus Manhattan, for example, we're at a much healthier median income to condo price multiple. So if the ceiling is an income ceiling, we're not there yet. But it'll be interesting to see specifically, I'm interested in it. Obviously rate hikes, the chance of a rate hike has decreased massively in the last couple of weeks with what's happened in the market. So that gives a little more fuel to the real estate fire. But it also brings the question, is that uncertainty in the market going to transfer over to real estate? Because real estate, does have some correlation to the stock market. We've seen it before. The question is just, how long of a lagging indicator is real estate, or will it be affected at all? I was actually interested in your take on this question because obviously you have more resale transactions than I do.
Well, what's funny is the beginning of the year, I talked a lot about how pre-con was minimum 30 to 40% more expensive. Now with the resale prices, I'm starting to bite my tongue. I'm it's catching up too quick, right? My argument doesn't stand as much as it used to. With prices and condos already up basically 10+% in the first month and a half of the year. I do see more growth. I don't think we're going to see 40%. I think we could get to the end of 2022 and maybe be that 30% in terms of, where things are happening. Because when you look at the average condo sale price, at least in resale, most of it, 72% of the actions happening under $800,000.
Yeah.
So if you just look at the average, I think it's possible, but that doesn't mean just because you own a condo, it's going to go up 30% this year. There's just so many other variables involved, right?
Yeah. And I think the market's also really fragmented. I put a chart up on Twitter today about different areas, January of 2020 versus January of 2022, where the average selling price was. And if you look at CO1, it's the downtown core is up 20% over January of 2021 because it was at its lowest. That was kind of the bottom of the market. Yep. But versus 2020, the previous, the pre-COVID peak of the market, we're only up 4% on average. But when you look at individual building, when you look at Harbor Plaza or 10 York, they're up 20% past their peaks for sure. So it's interesting to me how just some buildings are just ripping and others are not.
Now, are you noticing, because a lot of those less than 5-year-old good developer buildings on high floors facing the water are getting these crazy prices? Are you seeing it everywhere now, or is it still kind of just in that segment where you're seeing the resale at $1,400 to $1,600 a square foot?
Yeah, no, it seems to be highly segmented. There's still a lot of good deals out there. Yeah. Right. I look at some of the condos in Fort York, in Liberty Village even, and you're seeing 1,000 a foot still on some decent units, 1,100 maybe, but still there's a lot of good opportunity out there, condo prices that haven't budged that much. But then like Lakeview units in Humber Bay, for example, we just saw 1,660 a foot at Otis Soleil. And it's like, I didn't realize, Humber Bay was the New Yorkville. So it's kind of crazy to me.
And it's interesting because like, I think a part of it, when you look at other segments of the market that have gone up 70 to almost 100% in the last 2 years, it's like, well, it started at 500,000 and got to $1 million, right? Where other segments were already expensive, but like 10 York and Harbor, they were already expensive. It's not like they started cheap and caught up. They were already at the top, right?
Yeah.
Okay. So $2,000 a square foot for pre-con. How far away are we from that being the norm, not just for Yorkville or super luxury projects? Because I can remember very vividly standing in line for the launch of the Harlow with Brad Lamb in like 2015. And I remember him getting up there and the whole room was full of realtors. And he's like, okay, prices start at $650 a square foot. And the room like gasped. They were like, what? Because at the time resale was like $450. And now we're eating our words. So like, how far away are we from 2000? Is it realistic?
Like as an average, I think we're pretty far away, right? Okay. But I think a lot of people like to use the 2,000 a foot benchmark for pre-construction because they're looking at Cielo at Spadina and Bloor, or they're looking at 33 Yorkville. Right. And it's like those are some of the most premium projects that have launched in the last couple of years. Kind of comparing apples to like you can't take that and apply that to the broader market. What you can do is you can compare 2,000 a foot pre-con at Cielo to 1080 Bay, right? Where one bedrooms and dens are without parking selling north of 1,600, sometimes as high as 1,700 a foot. So a building like 1080 Bay on the one in dens are already within 20% of 2,000 a foot, which is crazy to think because it's a resale building. Yeah. But it isn't like we're not seeing those numbers. There was a unit at Hazelton, I think, that just sold for 1,880 a foot, over 1,800 a foot. Now, obviously that's a valet building. It's a very specific type of product for a very specific type of buyer. But 1080 Bay is kind of your nice commodity project in a great location by a good developer. And yet it's seeing 1,700 a foot resale. So I don't think we're as far as some people think.
Okay. So then when we look at just the history, let's go back like the last 20 years of pre-con prices, right? So tell me if I'm off on this. From my understanding was in the early 2000s, pre-con were not significantly maybe, but a lot less than resale because you were taking the risk to buy it new. By about 2010, they were almost the same in price. By 2013 to 2015, pre-con really started taking off, and now that gap has built. Is that how you've seen it play out as well?
I wasn't selling condos in 2000.
Me neither.
But, I was talking to Ben Myers about this because he was the EVP of Urban Nation. So he's been tracking the average pre-construction selling price per square foot for a long time. Yep. And he said since 1990, going forward to today, pre-construction has always, on a median price per square foot basis, been more expensive than resale. The gap widens and shrinks over the years. But of course, back then you could find far more deals where you could find pre-construction at or below resale. These days, it's incredibly hard to find a pre-con selling for the same price as resale, and borderline impossible to find one selling less than resale unless it's a project that launched a number of years ago and they just didn't increase their prices for some reason, which does happen, but it's incredibly rare. I would say right now is, at least in my career, the widest spread on average I've ever seen of pre-construction versus resale. But it is, again, very building specific because Westerly 2 by Tridel launched at Islington and Bloor in November of last year for $1,050 a foot. And there were resale comparables in the Islington Terrace buildings next door, which is also a Tridel building completed a year ago, at $1,150 a foot. So they launched a product, and in my opinion, left a ton of money on the table because they could have easily sold that out at $1,250 a foot. But we got like 10, 12 clients into that building for barely over $1,000 a foot. So there are exceptions to the rule, but generally I would say, pre-construction right now, probably the widest gap we've ever seen over resale.
Inclusionary zoning. I know your thoughts on it, but for people that don't, because on the surface level, it sounds nice, right? It's like, let's find ways to create more affordable housing for people that can't get in the market. And one of my favorite quotes ever is my friend Keith Roy from Vancouver. And he says, everyone agrees with affordable housing until it comes time to sell your own property.
Yeah.
So what's your perspective on what this is actually going to do to prices?
Well, on the pre-construction side, like, so to talk about pre-construction prices being more expensive than resale, this is only going to make that worse. So that gap's going to widen as a result of this. And obviously it doesn't apply to any buildings that were zoned last year or earlier. So there's a lot of land that was zoned before this, right? But you're going to start seeing it more and more common. It is a fun, the developer's not getting any breaks from the city for offering inclusionary zoning. So it is, that lost revenue has to be made up somewhere. And the only, if it's a saleable condo building, not purpose-built rental, the only way to make up that lost revenue is by charging more on the saleable units. So Canderel did a study on their 908 St. Clair project that was zoned pre-inclusionary zoning, just to determine how much more would we have to charge per square foot if we had inclusionary zoning at 8% of the building.
Yep.
And they would have had to charge $75 to $100 more per square foot to make the numbers work and to still launch the project. That's a big bump. That's a 5 to 10% bump on per square foot prices to the saleable units, right? And yeah, I mean, I've heard that. I think I've heard someone on my team said everyone's an activist till it's the time to buy a home. I like it because we have a huge wait list of people who need affordable housing in Toronto. But the downside is that this makes everything more expensive for everyone else, right? Yeah. So you're subsidizing. So pre-construction purchasers are subsidizing the cost of affordable housing. And you can say, yeah, but they're mostly investors. That's kind of true. But in the last year, I would say 50% of my book of business has been first-time home buyers or downsizers or upsizers in the pre-construction market. So there's lots of end users there as well who have to subsidize that cost. And the question is, at what point do investors say, okay, I could stomach a 25% premium over resale, but I'm not willing to pay a 35% premium. Yep. And so the demand and the appetite for pre-construction shrinks. As a result, less projects launch. It becomes less profitable to build these buildings. And so in the end, you get a contraction on housing supply or housing starts. So I think it could actually, in the long run, make it worse. And there's been studies done in Portland where they did inclusionary zoning, and it turned out that it did cause a decrease in new housing starts. So I think it looks good on paper.
Yep.
I just don't think it works in reality.
Is this just the new version of when rent control was put in 2017, and all of the what were going to be the new purpose-built rentals were basically canceled or then converted back to condos? Just the new version of that?
I'm not sure. Time will tell. It'll be interesting to see how it plays out. It'll also be interesting to see if there's any like stigmatized, like to see if some buyers refuse to buy in projects that have inclusionary zoning. That'll also be interesting because there is a stigma attached to it. And I'm curious if that'll change how people buy pre-construction. I'm also kind of hopeful that this will result in more, like, I love boutique, mid-rise, low-rise buildings. I love unique stuff. And at below 100 units, you don't have to do inclusionary. So it'll be interesting to see if we get a lot of like 99 unit boutique buildings to avoid doing that. They'll be more expensive, obviously, because per square foot they always are, but it'll be interesting to see if it brings more of that type of product to Toronto.
So right now, with a good percentage of pre-construction projects, people have to put 20% down, but it's staggered over a period of time. Now, one of the things that's been brought up that could potentially, if the numbers are true and almost 20% of buyers in general for Canadian real estate are investors, whether they're mom and pop investors or big time investors, do you think CMHC going from minimum 20% to 35% on the down payment will have any real effect on the market?
It'll have a massive effect on pre-construction, no question. It won't. It'll be a huge effect. We have a lot of buyers who have 20, 25, maybe 30% ready, 20% plus their closing costs. But a lot of pre-construction buyers are not people sitting on millions in cash, right? They're just like you and me. They're just refinancing existing properties, pulling that equity and reinvesting into the property market. So if you make them go up to 35% down, they start to look at their risk reward and go, well, I'm paying 20% above market, right? I'm waiting 5 years. There's risk of cancellation. There's all these risks associated with pre-construction. And now I'm levered, I'm only levered 3 to 1 instead of 5 to 1. That changes the risk reward massively. And maybe some people start going, well, maybe my money is just better in equities or whatever, which again causes contraction of housing supply.
And foreign buyers right now for pre-construction or international buyers have to put down 35%. Do you think so? You think it would be fair to say to local residents, we're going to treat you the same way as we are international buyers? It just like something that went through my mind, right?
I think in the event that the local deposit structure changed to 35%, I think number one, that'll actually mean less end users look at pre-construction as a viable option, right? Unless it's like, okay, at a pre-construction project, if you sign an affidavit saying you're going to move in, you get 20%, and if whatever. I'm sure there's ways to fix that. That'll obviously make pre-construction less of a viable option versus resale. But I think if they were to do that, foreign buyers, because it's the developers holding 35% for the 15% NRST, I think they would just increase the foreign buyer down payment another 15.
Okay, so final question here. If I am someone looking to get into the pre-con market, what's my mindset? How long down the road do I think I have to own this unit? Is cash flow a thing that even exists anymore? Like what are the questions that you're getting right now from your clients looking to get into that segment of the market?
Yeah, I mean, a longer term hold is always better than a short term hold. I think if you're buying a condo with the sole intent of assigning it, you're getting into the market for the wrong reason.
Yep.
The tax implications, the fact that you're paying 20% above market, like it's very difficult for assignments to pencil well. And, you know, let's be real, the transaction costs are so high in Toronto on real estate that you lose all of the advantage of holding real estate when you exit. Right? You can't refinance the property, like you're paying all these capital gains or worse on assignment. So I think the longer term hold you can stomach, the better. Cash flow is for the most part not a thing, unless you're willing to assume some very bullish predictions on rental inflation.
Right.
In our pro formas, we build in 3% rental inflation per annum. Very, very few units at very few projects work out cash flow positive with that assumption in place.
What is one project right now or upcoming project that's exciting you the most?
Upcoming project that's exciting me the most, probably either Lakeview Village at Dixie and Lakeshore, 7,500 units, making amazing use of what was dead land right on the waterfront. And it's an area I bike through a lot. So this is an advantage to me, and I'm a selfish kind of guy. Also the Gary Towers. I mean, how can you not love the idea of having Gary designed towers in Toronto, and what a location. I'm just concerned with the mirroring of the building that I'll be blinded when I'm driving on the Gardner, but time will tell. Okay.
So where can people, if people didn't already know of you before this, where can they find you online? YouTube, that's it?
Yeah. People have this misconception that I'm a realtor. I'm really a YouTuber who occasionally sells some condos.
You're speaking my language. All right, man. I really appreciate you coming on. And for anybody watching, if you want to check out Jordon's content, make sure to do that. It's awesome. And in terms of knowledge base on the pre-con side of the market, I don't think there's anybody that knows more than him. So enjoy his content. Okay, guys. So that's it. What an awesome conversation with Jordon. Like I said at the beginning, if you don't already, go to check out his channel, show him some love, make sure to subscribe because he puts out awesome content about the Southern Ontario and GTA real estate market. As always, my name is Tom Storey, and remember, home is where your story begins.